Welcome everyone to the final edition for 2024 of the JMI Wealth video update, and what a year it has been. Today we're going to take a few minutes to review the November market action, but we'll take a very swift look at the big themes along the line that we've seen this year and maybe a few comments also about 2025. Now, November was what we shall call it a pleasing month for returns. We started the month with global markets glued to the outcome of the US presidential election. And despite a late run in the polls by the Democrats and Kamala Harris, the result was really never in doubt once results started rolling in. And in the end, it was a very comfortable victory for President-elect Donald Trump. And the Republican Party now holds control of the Senate and has a slim majority in the House of Representatives. Now, share markets cheered the outcome. Firstly, because it was a conclusive outcome. And last month I mentioned that primarily financial markets love certainty, and an inconclusive result would have been quite destabilizing. This clearly wasn't the case. For the record, the S&P 500, it gained 5.9% in November. The Nasdaq, just over 6%, and the big winner was the Dow Jones Industrial Average, which gained 7.74%. That's all in US dollar terms. Now, the New Zealand dollar fell in value against the US over the month, so returns in New Zealand dollar terms were even higher. And here's the first comment for the year that was 2024. Annual returns this year to date have been pretty spectacular. Now, to the end of November, the S&P 500 has returned over 28% in US dollar terms. The Nasdaq closer to 30%. When you factor in a significantly weaker New Zealand dollar over 2024, New Zealand dollar denominated returns are pretty eye-watering. As at 30th of November, those two indices have returned closer to 40%. Yes, 40%. Now, Trump is seen as being good for business, even though there are material concerns about the potential inflationary impact of some of his policies. But what I want to point out is that so far, we only know what he said he will do. The reality will unfold as the year goes on, but it's not inconceivable that the implementation of some of his policies may be materially diluted from what he said. Now, the Australasian share markets joined in the party, albeit not with the same degree of enthusiasm as the US markets, but both delivered returns between 3 and 4%. Now, adding to the feel-good aspect of November, for investment portfolios, there was a fall in interest rates, which delivered positive returns for fixed interest asset classes. And just focusing for a minute on interest rate markets, we had important New Zealand labour market data was released earlier this month. Now, it did show that unemployment has drifted higher in New Zealand, but not as much as expected. That's because there's been a drop in what's called the participation rate. And at the end of the month, we also had the final official cash rate review of the year by the RBNZ. Now, the process of normalising interest rates in New Zealand was expected to continue, and financial markets had expected the central bank to shave a further 50 basis points off the OCR, and the bank duly delivered on that expectation. So the official cash rate now sits at 4.25. It's now fallen 125 basis points from the peak, which was 5.5. Now, the bank's forward projections see the official cash rate falling down to 3% by the end of 2027, contingent, of course, on inflation outcomes meeting forecast expectations. Now, current conditions are consistent with the expectation of another 50 basis point cut in February next year, and the bank is then expected to slow that pace of cuts to 25 basis points increments. But you know, there's a lot of water to flow under the bridge, and I think it's prudent to be a little bit circumspect about locking in those forecasts. All future moves will be data dependent. Now, the second big observation for 2024 is that inflation has fallen quite sharply since the beginning of the year, and with it, the all-important inflation expectations. But there's still an important balancing act for the central bank. Growth has stalled in New Zealand, unemployment is climbing, so there's a degree of economic harm being inflicted on New Zealanders. We assume that we're in the trough, we're at the bottom of the economic cycle, and that as 2025 unfolds, economic conditions will eventually improve. But it does look like this will really only be noticeable in the latter part of the upcoming year. And New Zealand's fortunes have been a little bit different from those of, say, Australia or the US. We've experienced more of a boom and bust scenario, while arguably those two other economies are experiencing more of sort of a soft landing. But look, 2025 is shaping up to be a fascinating year. Financial markets have arguably front-loaded a lot of the impact of the economic recovery if you look at the super returns we've seen in some of those markets. But for the moment, US earnings are expected to grow and, importantly, to broaden out from a concentration on those Mag 7 stocks. But we'd counsel that investors temper any expectations of return similar to this year in the next 12 months. Indications at this point are that sort of normal or high single-digit returns for mainstream share markets wouldn't be unexpected in 2025. So look, we head into the end of the year buoyed by the returns for this year, but mindful that 2025 will in all likelihood unfold a little bit differently. Interest rate markets, they've embraced the forward track of lower policy rates. Longer term rates have fallen, but we're cautious about the potential for large further falls in longer term rates, and we've modestly reduced positioning and interest rate exposure. That's offset by a modest global overweight exposure to Australasian and global equities. Look, we always say keeping abreast of these developments in ever-changing financial markets and making those ongoing improvements and adjustments to your investment portfolio is not only one of the critical benefits of having an experienced financial advisor in your corner, but it can also improve returns. You know, we'd love to help with that, maybe with your family trust as well, just ensuring that those hard-earned investments are being managed prudently and professionally. So look, feel free to contact us if you want to talk about your investment experience. You know where to go, jmiwealth.co.nz or on Facebook or LinkedIn. We'd love to hear from you. But to close out the year, we very much value the support of all of our clients. It's a privilege to be entrusted with assisting families and individuals and helping them along the way with their investment and financial journeys. Above all, it's a privilege and a responsibility, and we treat that with the respect that it deserves. So thank you for your continued support of our business. We hope you enjoy quality time with your friends and your family and have a happy, peaceful, and hopefully an invigorating Christmas and New Year. And we'll see you in 2025. So happy Christmas and a prosperous New Year.